Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and this is episode 28 of my Dow analysis series. In this video, we'll be analyzing the third largest company by market cap in the Dow Jones Industrial Average, which is United Health Group, ticker symbol UNH. United Health Group is a multinational healthcare company that offers healthcare and insurance services and is also the largest healthcare company in the world by revenue generated. UNH splits their company into two business platforms, which are Optum and United Healthcare. When reporting their financial numbers, though, they split the business into four segments, which is Optum Health, Optum Insight, Optum RX, and then United Healthcare. I won't go very in-depth on the different Optum businesses as they aren't as large portions of the business overall, but basically Optum Health is the segment that actually delivers healthcare services to patients. Optum Insight is a tech-heavy part of the business, and this segment basically connects different parts of the healthcare system in our country, and it makes data exchanges easier for pretty much all participants. Optum RX provides pharmacy care services through a network of more than 67,000 retail pharmacies. And finally, United Healthcare offers healthcare plans for employers and individuals. There are many groups of individuals that they serve, such as retired people, those on Medicare, and those in state or community healthcare programs. They also offer medical and dental benefits to about 7.8 million people that are outside of the United States, and these are primarily in Brazil, Chile, Colombia, and Peru. And like I said before, United Healthcare is the majority part of their business. It generates about 75% of revenues for United Health Group, and Optum and those three segments provide the remaining about 25% of revenues. So now that we know a little bit about United Health and their business, we want to look at how they have been performing recently. So we can look at their third quarter 2022 earnings results, and in that quarter, UNH generated revenues of $80.9 billion, which is a 12% year-over-year increase, and net income for the quarter was $7.5 billion, which was an increase of 31% year-over-year. This gives them net margins of about 6.5%, which is on the higher end of what they have typically generated over the past few years. Usually it's in the range of closer to 6%. United Health also cites this metric that they call the medical care ratio. And basically what this is they take all their medical costs and divide it by all of their premium revenue, and they get a percentage. And so basically, if this number is below 100%, that's good. That means that they brought in more healthcare premiums than the actual healthcare costs that they had to pay out. And in the third quarter, this was about 81.6% compared to about 83% last year in the third quarter, which is a nice improvement to see. I think it's pretty clear that this was a very strong earnings report in the face of economic uncertainty, and it really demonstrates their strong revenue and earnings growth metrics that we'll look at a little bit more later as well. And looking now at United Health Group's balance sheet, the first thing we can see is this massive jump in cash, which grew from about $23.9 billion at the end of 2021 to $42.5 billion at the end of the third quarter. The other current assets didn't change all that much, which overall drastically increased their current assets in that short time period. However, it is important to see that there was a large jump in current liabilities as well, which mostly offset the increase in cash that we just mentioned. I would like to have a little bit more insight into what this other current liabilities metric is here, because that's where, the majority of the big increase was, but unfortunately they don't really provide more information about what that means. On the surface, it does look a little bit concerning there, because that means the current ratio is less than 1. They have more current liabilities than current assets, but UNH is generally an asset light business aside from their cash position, and they generate a lot of cash as well every year. So I don't think the current ratio is really that big of an issue, but it is certainly something to consider, I would say. And if we look at debt as well, they have total debt right now of about $48.7 billion, which we can find by adding the long-term debt plus the short-term borrowings. And the general rule for debt that I like to see is that we want to see net income in the range of half of total debt, which means that the net income could pay off all of the debt within 2 years. Unfortunately, this isn't quite the case for UNH. Their net income is in the range of $15 to $20 billion over the past few years, which means that it would take them closer to 3 years to pay off all of their debt using their net income. I don't think this is that much of an issue for UNH because 3 years isn't all that long to be able to pay off that debt, but 2 years is generally what we like to see. At least that's what I like to see. So overall, I think the balance sheet is pretty solid. They could certainly benefit from some debt reduction and fewer current liabilities, but I don't think those items are super major issues at this point in time. Although UNH does pay a dividend, it's at a fairly low yield of about 1.23% right now, and their payout ratio is quite low as well at 29%, which means they have lots of room to grow that dividend. And speaking of dividend growth, wow, they have increased the dividend over 17% on average over the past 5 years, which is super awesome to see. And generally speaking, UNH has the earnings growth to back it up as well. We'll talk a little bit more about this when we talk about the PE ratio, but I'll just say it here. Over the past 10 or 12 years, UNH has grown their earnings on average by about 15%, which is pretty close to that 17% mark. So I expect the dividend to probably slow a little bit in the coming decade. 17% is very aggressive, but I think they can certainly sustain a rate above 10% without an issue, which is still a super great dividend growth rate. They also have a decent track record of growing their dividend, having increased their dividend for 13 consecutive years. This isn't the longest dividend growth streak out there, but you do have to start somewhere, and I think UNH is off to a great start to what could be a very long and strong dividend growth record. Now we are going to take a look at some valuation metrics for UNH. Currently, their PE ratio is around 26, as we can see here, which is well above their 10-year historical average of about 16, which we can see on this red line. Their PE has steadily risen over the past decade, which is definitely not the best sign to see, but when we take a look at earnings, like I mentioned before, we can see some monstrous growth over that time period. So from 2010 to present, United Health has grown their earnings per share by an average of 15.5% every single year. This is fantastic growth to see in the past, but as investors, we are investing for the future, so we want to take that with a grain of salt as well, and we don't want to just blindly assume that's what they're going to produce in the future. When we look at the healthcare sector, it has an average PE ratio of about 25, and the healthcare plans industry that UNH is a part of has an average PE ratio of about 24. So United Health is a little bit more richly valued than its peers in the healthcare sector, and the whole healthcare sector is a bit more richly valued than the overall market, which is currently trading at a PE of around 21. So when looking at the PE, I think we can kind of agree that UNH is a bit overvalued right now. They certainly have some impressive earnings growth, but I think the PE ratio still points to the fact that they're overvalued right now. I also calculated the fair value of UNH stock using a discounted cash flow model, and from that I got a fair value of $437. I like to apply a 10% margin of safety as well to the fair value, which gives us a buy price of $393, which is much below the $535 range that UNH is currently trading at. Similarly to what we saw with the PE ratio, this indicates that United Health Group stock is a bit overvalued right now. Although UNH does look overvalued right now, I think it's important to consider some nuance with the DCF calculation. There are some assumptions that you have to make, and when I made some of these assumptions with UNH, I was a little bit on the conservative side with the calculation. So for example, over the past 3 years, UNH has grown revenue around 8% per year, and analysts are expecting revenue growth of about 13% this year and about 10% the year after. And this 13% sort of makes sense given that we saw 10% revenue growth in the third quarter alone. But I wanted to be a bit on the safe side, so I stuck with the 8% revenue growth moving forward, and I played it safe in a few other spots on the calculation. So I would say that that $393 buy price is definitely a conservative calculation of the fair value of United Health Group stock. We can also look at a chart of the stock in an attempt to get a better idea of where we might want to buy the stock. Looking first at the 1-year chart here, there's really not all that much to see, but there is some decent support we can see around $445, and right now the stock is above the 50 and 200-day moving averages, which is definitely a little bit positive in the short term. But when we look at the long-term 10-year chart here of UNH stock, I think it gets really interesting. As we can see, the stock was growing, pretty quickly over the last 10 years, but after March 2020 and after that crash there, it really just exploded from there, and it looks to be way overextended in my opinion from these long-term trend lines that I've drawn. It is important to note, I think, that there's a pretty strong upward channel right here, and the stock really didn't just go straight up. There's kind of some ups and downs as it moved up, which is generally a more sustainable approach to growth, but there's no denying that there is a lot of space between the current stock price and these trend lines, and if I had to guess, I would say that we will see some reversions closer to the mean with this stock at some point in the future. It's just hard to say when. As the largest healthcare company in the world, United Health Group is almost certainly doing something right. Although their dividend yield is relatively low, they have an incredibly strong dividend growth rate that is likely to continue into the future. Additionally, their earnings and revenues are continuing to grow quickly, which will, like I said, allow that dividend growth to keep growing at an aggressive rate in the coming years. Their balance sheet certainly isn't perfect, but it's pretty healthy at this point. However, I would definitely classify the stock as overvalued. I definitely wouldn't even consider UNH stock unless it gets below $450, and I probably wouldn't be much more interested unless it got below $400. I would be interested to hear what you guys think the fair value of UNH stock is. If you have any insights to share, I would love to hear them down in the comment section below. Make sure to subscribe to the channel if you are new here, and I will see you all in the next one.